Good afternoon. Time to have a look at the markets picture. Starting off with things in the Asian side of things, they did look a little bit muted, and that's as a result of what happened in Hong Kong. Hong Kong saw rather a shorter trading day as a result of the bad weather conditions on that particular side. When we look at mainland Chinese markets, they were mixed, with the Shanghai composite mildly lower, the Shenzhen managing to close up 0.9%. As we move things to the European side of things, looking a bit muted as well. And this is as investors start to monitor the COVID-19 cases that seem to be flaring up in various parts of the world. And we look at the U.S. futures right now looking unchanged. The picture might change a little bit later on, but we'll see. But to talk to us about the various themes playing out and some of the company news that may have come out today, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time. Let's start off with the JSE. How is it looking at this particular point?
Thanks. Yeah, we've got the All-Share Index down, almost 0.5%, and this has really been driven by the financial index, which is down, almost 2.5%. So it's already falling. Industrials are flat, but a lot of the industrials are also it's being buoyed by Naspers, which the Naspers process listing is doing fairly well today. So they're up about 1%, which is dragging that whole index up. Resources are also mildly positive, up to around 0.2%, just being lifted a little bit, potentially by oil prices maybe, but we have the Sasol on the back foot at the same time. So maybe just a little bit of a recovery there after a very, very difficult couple of weeks for the resource index. And as you said, the S&P 500 finished strong on Friday, so we were up around 0.33% on the S&P 500. We kind of moved into Asia, that shorter trading day in Hong Kong, but Asia was flat. We've got the JSE overall down, so a little bit of steam coming out of the markets, and I think people are a little bit concerned, certainly locally, about what's happened with the third wave, and obviously the results of the family meeting last night. But we've also got the currency weakening a little bit, just very subdued trading, I suppose.
Right. So speaking of what happened last night, I'm curious to know how the locally leisure-related stocks are performing as a result of us going into lockdown level 4.
No, so as I think everyone would expect, they're heavily on the back foot today. So you got the likes of Sun International down over 7%. So it's really City Lodge down almost 5%. So you're clearly seeing it in kind of the hotel and gaming sector. I mean, this is obviously going to influence them massively. You've also got Distell. So Distell's obviously got the deal with Heineken in the background. That's set the share price on an enormous run, but we do have the share price down around 1.35% today. Obviously, with the banning of alcohol, that should impact them. But with that underpin from the potential deal with Heineken, probably not going to see too much action there. And you won't see the action in a stock like AB InBev. It's just too large, and South Africa is a smaller component of the overall picture. But certainly, if you look at our restaurant sector, something like Famous Brands also down around 3%. As the restaurants are just going to go through a very, very difficult time. I feel very sorry for many restaurateurs out there, especially the smaller guys that they've barely recovered from the first two waves and the stricter lockdown restrictions that we've seen, and now we're back into level 4, and it's going to make it very, very difficult for them to conduct business again. Obviously, with the hotel groups, the limitations on provincial travel are also going to have an effect. But it is what it is. This is a dangerous situation that we're in, and looking at the caseload, our hospitals overrun, and I suppose that's the last sector that you can have a look at as well. So, if you look at the likes of Life Healthcare, Mediclinic, Medcare, these are businesses that are going to be under incredible pressure. You might think that busy hospitals are a very positive thing for a hospital company, but unfortunately, with them being full capacity around the COVID cases, a lot of the elective procedures where they make their margin aren't going to go ahead, and that puts huge pressure on their financials as well.
You were talking about the oil price a little bit earlier on. I'm curious to know what the higher oil price means for global inflation, and whether you see central banks and the Fed starting to at least raise some concern about it.
Yeah, so certainly oil is an input into almost everything we do because of its use in logistics. Every product or service that you use, just about all of them are reliant on where the oil price is. So if you do have sustained higher oil prices, you are going to see inflation creeping into the system. The goods and services are going to cost more eventually. Now, up until now, the central banks and the monetary authorities you're referring to have been very focused on this inflation number being transitory. They feel that with the supply disruptions that we've seen thanks to COVID, that these are temporary things that are going to normalize over time. The one thing that you can't discount, though, is the higher oil price. So we've obviously got an OPEC meeting this week, and everyone, I think, is looking at that and just saying, with the much more robust demand that we've seen coming out of, just across the world, what are they going to do? They've still got those supply curves in place. And, unless they release more oil into the market, we're going to see sustainably higher oil prices. In our most recent investment committee, we were just pointing out that if you cast your mind back just pre-2008, for those that remember following markets at that stage, you can have oil, well above $130, $140 a barrel, and that really feeds into the system in terms of inflation. So this is certainly possible. And I think with the Biden administration taking a more environmentally friendly approach, we don't have Trump in the White House anymore. The idea that the American shale producers can come back into the market as aggressively as they used to is probably not the case. We have seen the U.S. rig count slowly increasing, but they haven't brought in the same capacity of oil that they have in the past. And then obviously, simmering in the background, we've still got the U.S.-Iranian nuclear deal still on the table, and that at the moment is holding back a lot of Iranian supply. And if that goes through and essentially Iran is allowed to export oil again, that'll put pressure on prices. So I think that's also what OPEC is trying to grapple with. So oil market's very, very uncertain, but it does seem like we're going to have sustained higher prices for the time being. That is going to certainly start to feed into inflation expectations. High inflation means that we are going to start seeing rate hikes. And that, unfortunately, is going to stifle growth. So I think it is certainly in the cards. And, we've already seen rate hikes from some of the other emerging markets, the likes of Brazil, Mexico, Russia, all hiking interest rates. I think it's only a matter of time before our own central bank, the South African Reserve Bank, is going to have to follow suit.
Right, and as Gary mentioned there, that OPEC Plus meeting taking place on Thursday. There's also other key events that are likely, will take place, and they will have varying effects. The OPEC Plus meeting having an effect on the price of oil as well. Brent oil waiting for that announcement, as well as the non-farm payrolls would dictate the dollar's next move. And various other news coming out. ECB President Christine Lagarde delivering her speech on Friday, as well as UK GDP numbers that we are expecting on Wednesday. Unfortunately, we've come to the end of that particular look at the markets. Thank you to Gary Boyson from Rand Swiss. We're going to take a quick